I always have property investors come to me where their borrowing capacity is maxed out. Now, this is after maybe one, sometimes it's after 10 properties, but they're just not getting enough money from the lender. Now, this can be very frustrating for an investor, especially one with a long-term property accumulation goal. And that's because they may have equity in a property already and they're ready to invest. But as we know, to get a residential property loan, you do need to show that you've got income enough to support the loan. But what if the rental income from the property is enough to cover the interest repayments? Why do lenders still require all our income and liabilities and expenses to determine whether the loan can be supported? Well, the good news is that that's not always the case. That is exactly how some commercial property works. And here's the key. With the right lease in place, some lenders will assess the loan based on the income solely generated from that property. This is called a lease doc loan. Now, this is only available through commercial properties, and that's because commercial property loans have different regulations than your standard investment home loan. Often the lenders won't need payslips or tax returns, and they won't be assessing your loan based on your liabilities or your expenses that already exist. Just a solid lease agreement and a tenant already in place. If the rent covers the repayments or the interest cost, then the deal can stand on its own. Commercial property is a great way for investors who've hit their maximum borrowing potential to keep investing in property. Commercial property is likely your answer. So reach out to us and we'll see what's possible.